Welcome back. Let's get straight to all the stocks that we're tracking for you. Our research team comes up on the screen. They're joining in with CNBC-TV18's top list of stocks for the day. Rima, you'll take center stage first. Just revise the news.
Well, just to refresh the kind of tech wreck that we had across US markets and European markets overnight, just look at that. You had legal stocks because Claude came out with a legal update, Anthropic's Claude, and therefore you had names, like there's a company called Relex, which underperformed. LegalZoom was under pressure. Reuters was down 15.5%. Even SaaS companies like ServiceNow, Salesforce had a decline of nearly 7-8%. And names like a PayPal, Gartner, FactSet, Morningstar, all down between 10 and 20%. So deep in the red for these companies. And the Indian IT companies were not spared. ADRs of Infosys, Wipro down 5%. Accenture and Cognizant, which are seen as proxies for the Indian IT services companies, also sold off close to about 10-odd%. And the fear is that is the outsourcing model going to be at risk eventually? If not today, but maybe down the line. So keep your eye on IT.
All right. So tech will be under pressure. We'll be looking at some of the banking and financials names to bat for the bulls. However, Bajaj Finance, I believe, is not on that list. Gaurav, the numbers a little bit weakish.
Well, yes, if you look at Bajaj Finance, there are two things that we need to understand first. First is that Bajaj Housing Finance is a company, subsidiary company, where Bajaj Finance sold its stake and they gained around 1,400 crores. Along with that, in this quarter, they have also created accelerated provisions worth ECL, worth 1,400 crores. Now, this 1,420 crores worth of gain is not in the P&L because it is still the holding company for Bajaj Finance, and that is the reason if you look at the profit number, that has declined sharply. So let's look at the numbers first. Net interest income and PPOP both increased by 20%, but because the provisions were higher and it was not offset by the gains, if you look at profit, that declined by 6% and it was 20% below the street's expectation. Now, this was a weakness in the result. Apart from that, if you look at ratios, now definitely credit cost that increased, but if we adjust for this one-off impact, the credit cost was actually in line with the street's expectation. Now, going ahead, what happened is that even the management commentary, it wasn't that encouraging to say in terms of the ECL provision specifically, because what they said is that they wanted to ensure the balance sheet and P&L to be shock-proof, and at the same time, one of the reasons why they took provisions accelerated is because of the customer leverage which is rising. That is something which can hurt the stock, and that is the reason why going with red in Bajaj Finance today.
Okay, thanks very much for that. And this is the story we'll come back to because it's important for the NBFC space as such. Pidilite is the next one we're going to tackle. Mangalam is here with details. Mangalam, morning.
Good morning. So consistently good numbers coming in from Pidilite. Here's a company that, consistently delivers double-digit revenue growth, 12% EBITDA growth and 12% net profit growth. That's what happened in the third quarter as well. And that's what the street was expecting too. The revenue was over 3,700 crores. The street was expecting a similar number. EBITDA at 894 crores. The street was working with a number of 890 crores. And the net profit as well, 624 crores. The street was working with a number of over 600 crores as well. Overall volume growth at 9%. The street was working with a range of 8 to 10%. This time around, the positive is that it's been led by the consumer business, where the volume growth has been near 10% versus expectations of 7 to 8%, whereas B2B volume growth has been slightly shy of expectations. And the company attributes this to lower exports of industrial products, which I believe will improve once the US, there is some certainty around the US-India trade deal. So all these factors point towards green for Pidilite.
Right, thanks very much, Mangalam, for that. Let's move on to AB Capital now. Gaurav?
Well, as AB Capital, the numbers are actually good. Net interest income and PPOP both grew almost by 22%, while profit increased almost by 28% on a year-on-year basis in terms of their NBFC business. Apart from that, if you look at ROAs as well, they have expanded, and now management says that the ROAs will be in the tune of 2.5% in the next 4 to 5 quarters, which leaves another 20 to 30 basis point of further headroom for ROAs. In terms of their NBFC AUM, that also increased almost by 24%. Now, let's move on to other businesses. Housing finance. Now, this was in focus because we recently saw the deal happening. And if you look at AUM growth, there also it remained very healthy at around 48% with ROAs of around 1.96%, and company also anticipating ROAs to go even higher in this segment as well. Looking into AMC business, if you look at the growth, 11% growth is what they have delivered, and they are also saying that the fundraising is underway because of one of the funds which they have been actively looking at. So all in all, a very good set of number from the company. Commentary remains positive, so we may see some positive uptick in this counter today.
Thank you very much for that. Ekta, how did Mankind Pharma's numbers look?
Well, in line for Mankind, so revenue was up around 11.5%. Margins came in at around 25.8%, but the profit was a little below expectations. Domestic business was up 11%, which is basically the bulk of their business. Within that, the consumer health business, which is a part of the domestic business, was up around 5.2%. It was down 10.2% Q-on-Q, and exports were up around 14.1%. So both domestic business as well as exports did well. Overall, an in-line quarter for Mankind.
Okay, all right. Ekta, thanks a lot for that. Well, I'm tracking two companies. One is Lloyds Metals and Bharat Coking Coal. Lloyd Metal, actually, the numbers look quite good. They enhance EC limits for iron ore, faster ramp-up of the pellet plant, and improve sponge iron volumes. All of them put together led to a surge in the top line. Margins as well improved because higher value-added products is what they're focusing on. Pellets, the commencement of the slurry pipeline as well has helped them report very, very robust margins. Now, the EBITDA numbers come at around 1,750 crore rupees. I recall a time when the full year they were doing 1,500 crores. Now, on a quarterly run rate, they're doing this sort of a number. So it's looking quite good, with margins at around 35%. The guidance should come up for you. They've been aggressive since they've got EC limits. The iron ore volumes will ramp up. Pellet as well will ramp up. And they'll be moving into a steel company as well. And we'll see glimpses of that in FY27. So that's a stock expect to open up in the green. That's already corrected 20% from the top. BCCL, that's the other one we're looking at, the newly listed company. It listed with a premium of more than 90%. The stock has come down since then, but the management actually had told us that things were soft in the past quarter, but they expect things to improve from here on. So we'll have to track how exactly that happens. For the past quarter, the offtake is down by close to 10%. Realizations is down close to 14%. That's why you're seeing the top line degrow, which has flown down further into all the other numbers. The receivables as well have gone up. So BCCL float is limited, but expect the stock to open up in the red. That said, let's go back to Mangalam. He's highlighting some more earnings. Mangalam, run us through the list.
A bunch of numbers and all of them green, Nigel. Let's start with Restaurant Brands Asia, basically the owners of Burger King India. Good performance coming in. 12% consolidated revenue growth. The EBITDA has actually grown by nearly 30%. Margin expansion. Losses have narrowed. And remember, this is just a reported loss because the company's cash profits are higher on account of higher depreciation. They report that loss. SSSG in India is at 4.5%. That's a positive. They've added nearly 67 stores. And the big trigger for them, obviously, during this quarter, where Everstone sold their stake. And there is a new change in their ownership. So these factors should play out in the positive for Restaurant Brands Asia. V2 Retail as well. Performance, solid performance coming in. 57% revenue growth, 55% EBITDA growth. Net profit nearly doubled. And the company's opened about 35 stores in this quarter. Reported SSSG for 2%, but if you account for the festive season shift, it's actually a near 12% SSSG growth that the company's reported. And they've also announced a board decision to split the stock from 1:10. And finally, Sheela Foam, the Kurlon acquisition, finally doing well for them. Overall revenue growth at 11%, EBITDA grew by about 30%, and the net profit on a very feeble base grew from 20 crores all the way up to 50 crores. So all these factors doing well. Mattress volume growth of 11%, foam segment grew by 20% for the company.
Thank you very much for that. And a lot more companies came out with numbers like Nazara Tech. You can keep watching that ticker. Kansai Nerolac profits went down by 82%. But for now, let's talk about gold, because gold is back above $5,000 per ounce. And lots of updates coming through in crude and copper. Manisha?
Well, absolutely. Pardon me. I'll start with gold first, because 6% of gains in the overnight market. We are trading at around $5,050 an ounce. This is the biggest one-day gain that we've seen since 2008. And that's the kind of volatility that you're looking at in case of gold and silver, making records on the way down and on the way higher as well. Having said that, it really is about the geopolitics that the markets are keeping an eye on right now. So even as US and Iran are slated for a conversation on Friday, the US forces have downed an Iran drone in the Arabian Sea. There also are reports that Iranian vessels have challenged a US-flagged oil tanker transiting the Strait of Hormuz, and that really seems to be keeping not just the gold and silver prices in the positive, but the crude oil prices, which also gained nearly 4% in the overnight market, so much so that we are back above $68 a barrel for the Brent there. Also supporting the crude prices is the U.S. crude inventory declined by 11 million barrels. This is the biggest decline that we have seen coming from the month of June. And then there also are reports from OPEC Plus suggesting that the global oil demand will pick up from the month of March or April, and it would be in the first week of March that OPEC will decide on further output plan. So various statements, much anticipated, and then of course you have the Chinese Lunar New Year holidays coming in as well, and ahead of that there is some restocking in metals that also seems to be quite supportive.
Manisha, we'll come back to you. Very interesting. Thank you very much for that. We take a break. We're back. Rajat Rajgaria of Motilal Oswal Equities is going to be with us on the trade deal and markets ahead. Stay tuned.